February brought us some good news about the real estate market in Manhattan.
Contract activity is up double digits, inventory starting to recover, and the spring market, we're optimistic.
So let's dive in here on the Real Talk NYC Real Estate Podcast with John and Jonathan.
So as always, we'll start by talking about contracts signed. So contracts, we had 929 contracts signed, very slight increase, 1% from where we were last year. Month over month, which accounting for seasonality, still a little off from what we saw over the 10-year average, but we're up 18%. So
healthy increase.
A healthy increase. And, we'll get into the specifics. It looks like 1 to 2 million struggled a bit. The other price points did really well. I believe what we see is the transition. So we've talked about since December, now with the news cycle, et cetera, and interest rates being fairly flat. They increased a little bit during the month of February, but they're bouncing in that 6.5%, 7% range. I do believe that the explanation is that we're in that transition period where people still aren't sold to jump in, including sellers. We usually see the biggest uptick in March and April, so expecting that number to climb significantly along with contracts signed. When you're in a transitioning market, the stats kind of end up being all over the place. Like, it's hard to necessarily pinpoint why.
But I think that all the numbers are indicating in the positive versus the negative. Most of the categories that we've seen increase in contract activity, and that tells us that I think people are in that mindset of dating the rate and marrying the home, working on finding an apartment which suits their needs, but then also people who need to find homes. And as we'll talk about in a minute, sellers who are slowly starting to put their apartments on the market. And I do think that there's a lot of kind of hope from the buyer side that the Fed will loosen the rates and that that we'll see the mortgage rates starting to decrease later in the year.
Everybody's always talked about that decrease when the Fed will do it in the last half of this year. So they haven't increased, they've kept it stable. So everything's going according to kind of expectations since the end of December when all of that news cycle started talking about that. Of course, New Yorkers can be a little impatient sometimes, so we want to see it happen. I'm still very hopeful for March and April. I think and this seems to be nationally. We were just at our coaching conference a couple of weeks ago, and talked a lot about national statistics where we always focus on our little island here. It sounds like nationally they're all struggling with inventory, pent up demand because of the lack of good inventory. And with those interest rates coming down, everybody across the board is kind of feeling like this last half of this year is going to be when we're really going gangbusters, but it will start in the spring as people, especially in our market, spring is when people really do get moving because of schooling for kids and what have you, and just the change of seasons. People want to be out and about and such. So it'll be very interesting to see what happens in March with the March numbers. That will be the most telling for us.
I hope that from the standpoint of the buyers, that more inventory starts to enter the market, because what we're finding is some of the buyers that we're working with, they just simply can't find what they're looking for. There's more choice.
But we get them up to speed, and then it's like, okay, now we're just waiting for new inventory to hit
or
the
the
market.
Apartments that we want, there's several bids on, but that's a different story. So inventory-wise, we did see a slight increase, 5% month over month, a little over 6,000 units on the market. So last month we were in the 5,800 range, and yet still 3% year over year behind last year's inventory. As we are encouraging sellers to list earlier this year, given that it is an election year, some sellers are following our guidance, and it would indicate by the numbers that more sellers are banking on a robust spring market and getting ahead of the rush. That's our great hope.
Well, and when you look at that 10-year average that we track, which is now an 11-year average, but that's generally just between January and February, new apartments coming on the market is somewhere around 2%. We were at about 5% this year for seasonality. That proves, okay, well, we've got, a few more people throwing their apartments on the market a little bit earlier. Even though we have increased number of contracts signed, increased amount of inventory, and we've been talking about it, is the mix of that inventory. Mm-hmm. So it's like we have this chunk of inventory that is apartments that don't trade in even the strongest of markets, take a little longer to sell. Apartments that need work, especially a significant amount of work, are still very challenging. Buyers still are not, what this tells me is buyers are still not ready to pounce on that inventory. So it'll be interesting to see what happens, and that's a problem. I mean, those apartments always, they have to be enticing for buyers to jump in on them. That's right.
They have to be discounted to a level that is really, really significant enough to generate the bids on those apartments.
And I would say buyers right now, what are we telling them? The buyers that we've just started working with is, okay, well, listen, you're coming into the market at a good time. Spring is when we typically see the most amount of inventory. Let's get you up to speed on the inventory that's out there. And then it's just a matter of seeing the new stuff when it comes on the market. But what does that tell a buyer is that, there might be something better right around the corner because I know there's going to be a good amount of inventory. And the first thing that would lop out a possibility, unless they were specifically looking for it, is, well, this apartment needs a lot of work. Maybe there's something that doesn't need a lot of work right around the corner. So that could be holding that buyer off.
This inventory number versus the amount of contracts being done. Yes, we're seeing more contracts being signed. We've seen more inventory hitting the market, but sellers, we believe there are still sellers who are on the fence, who are not prepared to sell because they're at a 2.5% interest rate versus having to buy something at a 6.75% interest rate. So again, we're transitioning, just like you mentioned before.
Well, you also have sellers that are locked into these very low interest rates, around 3%, some even in the mid 2s. Yeah. No matter which way you slice it, the jumbo mortgages now, or maybe the rates we use here that we have in the show notes are the conventional loans, the Fannie, Freddie, but you go to the jumbo level, it's in the high 5s, so you're about 1% lower on those.
So almost double
you're still
what they're
doubling
paying.
your interest rate. So it is a significant change in your monthly expense, even though there's a lot of money here to absorb it, a lot of income here to absorb it. But
people don't like having to double their mortgage payment.
Yeah, it's still a tough tough hurdle to get over. So that's why March is going to be very interesting. And I do hope, that good inventory coming on the market is really what we need, I think, to fuel the fire of the market here. So last but not least, days on market, John's favorite statistic. As we talked about, transition markets are a little bit funny. They're hard to find trends. Days on market did go up just 3% year over year, went down 10% month over month. So some things are trading. It just means things that were on the market a little less traded more than the ones that have been on longer, which is that chunk of inventory that we talked about earlier.
At 153 days on the market, so it's still taking in upwards of over 5 months for the real estate to sell.
Yeah.
And some apartments are languishing even longer based on the considerations that we mentioned earlier in the podcast. Say, based on the 10% decrease month over month, that the newer inventory hitting the market, the better priced inventory in prime markets or totally renovated homes that are really beautiful to look at, are garnering quicker days on market.
Yeah. So and that's it'll be interesting to see what happens with it. But again, days on market is not something you want to put a whole lot of stock in, because it really just gets locked in when you go to contract. And what we're going to see, I believe, is as we have a lot of inventory hit the market, the good stuff's going to trade very quickly.
Correct.
The renovated apartments that have mass appeal are going to trade very quickly, which would drag down the days on market.
That's correct. But
then you're going to have the buyers that are waiting for inventory to hit the market. And we've had this with one of our listings recently. And they're like, you know what? This is still the best option. This apartment that's been on the market for a while, but it has a little higher maintenance, or it needs a little bit more work than what I'd love to do, but it's got blah, blah, blah. And that'll get swallowed up, and that'll drag days on market up. So
Correct.
It's not going to be a clear like a clear trend statistic where you're like, oh, well, it's doing this. That's obvious.
The only thing I would say to
pull.
that is it would be a clearer trend. Like, because we've been fluctuating in what I would call a reasonable change of days on market. If the days on market spiked, let's say it kept increasing and increasing and increasing in upwards of over 200 something days, then we'd see a major shift in the marketplace.
Yeah.
Or we see these decrease in days on market. How did we get to 81 days on market, 74 days on market? You see, then we'd say, okay, we've been a different ball court. But now we're a steady and slow moving ship in New York City. How's that, Manhattan? Yeah. We're like the QE2.
Yeah, it's always slow moving. The changes in our market.
That's correct. They're nuances. It's not like buying.
It's a new market.
It's not like buying Nvidia.
No.
Okay. So with that, I think we covered it. It's great to see you as always, my friend.
Likewise.
For now, be healthy, safe, and most of all,
remain in gratitude.
Thanks for tuning in. We'll see you next time.
Thanks for watching or listening to the Real Talk NYC Real Estate Podcast. If you want to find us online or sign up to get our monthly and quarterly market stats, come on over to our website, GasdaskaConlonTeam.com, or you can find us on all social media with the handle @GasdaskaConlonTeam. If this show was helpful, entertaining, or informative, consider telling friends and family or leaving us a review on Apple Podcasts. Thanks for tuning in. Be sure to subscribe to the podcast so you don't miss our next episode, and we'll see you next time.